Okay, perfect. Okay, so welcome everyone to the to this masterclass on provisional tax. And the deadline is on Thursday, and so we are going to try and get this submitted before Thursday, and possibly if you have to pay this before Thursday. But let me check, let me just look at the participation. I'm going to admit everyone, and then we can get this party started. Okay. All right, so the first thing I think that we have to say is, what is a provisional taxpayer? And specifically for August, if we're looking at submitting, and people need to submit by at the end of August or at the end of Feb, you're not sure if you're a provisional taxpayer. The simplest way to say, oh, I'm definitely a provisional taxpayer, is if you are a company, you have a company, and so you're obviously you have to pay provisional tax. So you have to submit provisional tax returns as a company or a trust. And then if you are an individual, it depends on whether you are earning additional income outside of employment. Rental income is an interesting case. But still, if you make a rental profit, you may have to submit a provisional tax return. But let's get into the first slide. I'm going to admit more people here. The waiting room is still filling up, but we have to get started. Otherwise, we're going to run out of time. Okay. So let's do this. So when you go onto e-filing, you log on and you go into provisional tax, you will have to request your 2024-01 form. So the 2021-0 form, the 2024-01 form, that would be the August form. And when you open it, you will notice that you have to complete the gross income. You have to complete the estimated taxable income, and then SARS will calculate on your behalf. Okay, we've got more people joining. Wow, this is crazy. Okay. And so you have to calculate the estimated taxable income. Now, you have two choices when calculating the estimated taxable income. You've got the basic amount, and then you can also choose to use actual figures. So right now we're going to go over and talk about the basic amount first. Okay, so we're going to look at that. The basic amount is what SARS have as the last available estimate, and that is based on your last assessment. So say your last assessment, the total taxable income for that was 500,000, then that will be the basic amount that you can use as an estimate. So if we go before that, if a basic amount is 500,000 Rand, that will go in that red circle there. Okay, and then SARS will actually calculate the tax on the tax on the estimated taxable income. I'm going to admit more people. So we've got the basic amount, which is based on the last assessment. And if you use the basic amount, it's quite easy to do. You just plug in the figure that SARS have. But it can be inaccurate. The downside is that the value isn't what the actual figures were for now March to August, right? So sometimes what you did in the previous tax year, what you did in the previous tax year is different to what you've done between now March till August. And the provisional tax period, just to confirm for everyone, that will be March 2023 until August 2023, which is now. Still more people joining, just admitting all. All right. Then, alternatively, if the last assessment, so I highly recommend everyone should be making notes. You can use Google Notes, you can use pen and paper. This is being recorded, and I will upload this to YouTube when the recording is finished. Okay, I'm gonna admit more people. All right. So the first option is using basic amount. The second option is to use the actual figures. Actual figures is based upon the actual income. Is based on the actual income and expenses from March to August, and this takes much longer to calculate, but it's more accurate. Okay, so remember, this includes your employment income. So it includes your employment income, but we'll take into account pay as you earn a bit later. Okay, I'm just going to show you where to calculate that. So if we go back, your estimate income minus expenses would go here under estimated taxable income. And that's on the RP6 form on SARS e-filing. Okay. Now, actual figures part 2. Step 1, calculate all your sources of income. So that's important. It's rental income, it's employment income. So if you're a freelancer or you're an independent contractor, any invoices that you have, you're going to add that all up, and then that would be step 1. Step 2, calculate your estimated expenses. Now, you can use rough estimates for August, okay? If you have retirement annuities or if you earn quite a bit in interest, you can include the exemptions there. But that would be step 2. So step 1, include all your income sources. Step 2, calculate your estimated expenses and deductions and exemptions. And then step 3, annualize the result. I'm going to show you guys how to do annualization. So you're going to have income minus expenses, deductions, and exemptions. Then you're going to be left with an amount, and that will be only based on 5 or 6 months. Okay. So let's show, and I'm going to show a quick example of how you would do that. And that's the next frame. All right. So in step 1, we are going to do the calculation. So this person, this is just an example, so don't look at the income and get frightened. I just went with what was on top of mind or what I was working with today. So you use the estimated taxable income. In this case, it was 1.1 million for the first 6 months of the year. The person's estimated expenses were 50,000. And they also had a retirement annuity contributions of 50,000. Okay, so that's the estimate for the first 6 months. And so the estimate for March to August, which is now this year, March 2023 to date, was the 1.1 million minus the 50K in I saw it. Damn, I made an error on my own. Oh, that's awkward. Okay, sorry everyone. I made a little calculation error here at the bottom. It says RA 50K at the top, but at the bottom it's actually 100K. Sorry about that. So you're going to take the income minus the expense of 50 minus the in this case, the RA I wrote here for 100K gives you 950. So that's the estimate just for August, for March until August. Now, step 2, I'm still admitting people. This is crazy. How many people are we on? 56. I actually told my wife, I think there's only going to be less than 20 participants. So I'm grateful for everyone being here. All right. Let's do step 2. Step 2, you have to annualize the estimate. And what does annualization mean? It simply means you take the 6 months and you turn it into a year. So the estimate of 950, which is March to August, must be annualized. So we're going to divide the 950 by 6 months because that's how long the estimate was for, and times by 12. And that will give us the full estimate for the year. That will give us the 1.9 million. And that gives you the estimated taxable income, which you then can go, if we go back, which you are then going to put under the estimated taxable income. All right. Is everyone with me so far? Can I just get thumbs up? Am I going too fast? Am I going too slow? Okay, good stuff. All right, I'm going to carry on into step 2, which is after you've done the estimate. You don't, the nice thing about provisional tax and on SARS e-filing, when you've calculated the estimated taxable income, let SARS do the dirty work for you. Okay. You don't need to work out the tax by hand. And this applies for companies and individuals. So as an individual, you can plug in the estimated taxable income, but SARS will actually calculate the tax on the estimated taxable income on your behalf. So that's a step you don't have to do. Tax on estimate. Gonna admit more people. Okay. So now you've gotten to that step. So now you have the tax. All right, let's get to rebates. The rebates is not a complicated section. This is what it looks like on the form. It will have the annual rebate, which this year for 2024 tax year is 17,235. And that will automatically be there. But what won't automatically be there is the medical aid tax credit and the additional medical aid tax credits. So if we go back, like I said here, annual rebate is there by default, but you must complete the medical aid tax credits. And that is dependent on how many dependents you have on your medical aid. If you have 2 dependents, your medical aid, this 8,000, can be plugged straight into this medical aid tax credit place here. Okay, if we go back, if you only have 1 person, 1 dependent, then more people's flooding in. Then you're going to plug in the 4,368. And so you can see, as you have more dependents, the amount increases. I didn't include one for 5 dependents. I don't know a lot of people who have 3 or more kids. So that's just a side note. But I highly recommend that, or I strongly recommend that you ignore the additional medical tax credits, especially with the August submission. And simply put, the August submission it's less detrimental if you don't, if you make a slightly inaccurate estimate for August, and I'll give the reason why that is. Let me check the chat. Cool. All right, chat is quiet. But if you have questions, you can post it in chat. Okay. All right. Let's go. So that's the rebate section. Again, the annual rebate is automatic. The medical aid tax credits, it's dependent on whether you have a medical aid or you contribute to a medical aid. Okay. Then tax result. I'm going to show you the example, but let's talk about. So this is what the tax result will look like. SARS will calculate the tax for the full year. The full year is going to be divided by 2 to give you the tax which will be due for August. Okay. And then the critical step, and this might preload, is the employee's tax for this period. Okay. So if you were paying pay as you earn from March to August, that is the amount that goes into the employee's tax for this period. Okay. So that will reduce the tax that's payable for August. Very important. If you don't have an amount in employees' tax for this period, if you don't have the employee tax for this period, or you don't have foreign tax credits, which doesn't apply to everyone, you can't reduce you won't be able to reduce the tax payable for this period. So let's go back in order to do this step. SARS will divide the tax that they calculated previously to get the August tax liability. Only complete the employee's tax if you actually paid pay as you earn from March to August. Okay, so that's very important. As you can see here, in this case, this person whom I just did a screenshot of their taxes, of their RP6. But you can see here that the employees tax, they are self-employed. They don't pay pay-as-you-earn, so we make this amount 0. And so the tax payable is, like you can see, A minus X minus Y equals the tax payable for this period. Okay, let's go over to some cheat codes, and then I'll rehash everything, and then we'll do a Q&A for any questions that's left in the chat. Okay, cheat codes. The first one, SARS will not penalize you for August if you have a low estimate. Okay, so if your estimate is slightly inaccurate or you're not sure what it was, I would actually recommend to use the basic amount, unless you prefer using, if you know that your March to August is way better than the previous year or way worse. Okay, so that's the first one. SARS will not penalize you for the August estimate. SARS can and will penalize you for an inaccurate estimate for that will be for February, but August's estimate matters a bit less. Okay. Number 2, any amount that you do pay for August will help with February. So just as a quick explainer, any provisional tax, which is what you pay in August and in Feb, reduces the total tax that you have to pay for the year. Okay, so again, provisional tax are especially if you earn income that you didn't pay as you earn on. You invoice companies and they don't deduct pay as you earn. Okay, so that's what you're paying the provisional tax for. All right. The third one, you can edit employees tax to make a payment of 0, but this can be detrimental if you did not actually pay as you earn. So if we go back to this example, in this case, it's easy to say, you know what, SARS, I actually did pay as you earn of 560,000. The problem is, if you didn't pay the pay as you earn, that would be lying. Okay, so so don't do that. Tell SARS the exact amount, or figure or work out if you did pay actual pay as you earn. You can work it out by hand, or you can say, roughly, I think I paid about 40,000 in pay as you earn, and then you pay the balance. Okay, and let's get to the last one. Boring but important. There's a 10% late payment penalty. So if you pay on Friday instead of on Thursday, look, Thursday is the deadline. Thursday is the 31st of August. There will be a 10% late payment penalty on this amount, on this 567. For example, if this person pays late, the penalty on that will be 56,000 Rand. Okay, so make sure that the payment is made on or before the 31st of August. What I recommend is submit and pay, preferably the day before the deadline. Usually the day before the deadline, it would be the 30th of August. In this case, for this month, and for Feb, it might be the 27th. I'm not sure which date oh no, it's a critical yard, so it might be 29th. But yeah, definitely, preferably to submit and pay before the deadline, and don't get the reference wrong. So I'm going to show you guys how to do the reference now. Okay, admit all. All right. And here's the formula of how to pay the provisional tax properly to SARS. The beneficiary is SARS-Prov, not SARS-ITA. Okay. And the payment reference number would be your income tax number, followed by P, which is the tax type, followed by 2 zeros, the tax period, which is 01. So as you can see here on the left-hand side, you've got tax number followed by P, followed by 2 zeros, 01, 2024. And so, yeah, so it's tax number, tax type, 2 zeros, the period, and then the tax year. And that's how you pay. And that's the EFT details to pay SARS. In order, okay, so let's just go completely back all the way. So this is just a quick summary, and then we will go into Q&A. I will actually, yeah, I will go by chat, and maybe I'll show also an example, but I have to log on to e-filing and whatnot. So yeah, all right. So firstly, you're going to use the basic amount or actual figures. Basic amount is usually based on last assessed. Okay, you're going to plug that in under estimated. You're going to plug that in under estimated taxable income. Basic amount is usually the last available estimate. It's easy, but it can be inaccurate. Step 2, or you can use actual figures, which is based on the actual income that you earned from March to August. It takes longer, but it's more accurate to do. And then you have to annualize the result. You don't have to do the annualization if you use the basic amount. Okay. And how do you do annualization? You take your estimate that you worked out from March to August, divide that by 6, times that by 12, and then you get the estimated taxable income. Okay. Then SARS will calculate the tax on your behalf. You don't have to do it. Step 2, do the rebates. And the main rebate that you must fill in is the medical scheme's tax credit. SARS will calculate the tax divided by 2, which is A in this case, and then minus any taxes that you already paid, which is mainly pay as you earn and foreign tax credits, and that gives you the tax payable for this period. Again, SARS will not penalize you for a lower estimate in August, but anything that you do pay in August will help in February. You can edit the employee's tax to make the payment null, but this can be detrimental if you don't actually pay as you earn. Very important, don't forget this, 10% late payment penalty if you pay late, and it's better to submit and pay on the day before the deadline. And don't get the reference wrong. And here's the reference. The reference will actually be on the RP6 form. Okay. Okay, I'm going to pause here. I see there's still quite a bit of time, so I'm going to stop sharing, and then I'm going to all right, I'm going to see if I can do a little favor for everyone. And that is actually, okay, show me thumbs up. Who wants to see a live example of me doing a provisional tax return on e-filing? Just thumbs up. Thumbs up in chat, and then we can show actually a live example. Okay, we've got only 10 minutes. Okay, let's see chat. Okay, chat is going crazy. Good stuff, good stuff. All right, I'm gonna log on to e-filing quickly. And get into and let's see here. Just give me 1 second. I'll be with you guys right now. This one. And then returns. Good stuff. Okay, let's share screen. I'm going to share my screen. I'm going to share screen 2. Okay, so now everyone can see what's up. This is the e-filing screen. everyone can see, unfortunately, I don't know. So the first step is to actually request the form. What I recommend is just to click on here, refresh historic data. And so this is the 2401 form. Okay. Going to go into the RP6. In the actual form, what you want to do is you're going to complete the estimated taxable income. Say that is 500,000. It's going to work out the tax for you. Okay. Then you're going to plug in the medical. Let's say you've got so many dependents. That was 4,000. Let me just see what those medical aid was. Just give me a second. 4368. So 4368. Okay. And then my employees tax that I paid for March to August was, let's say, 50,000. And then that's basically how you do the form. So step one, put in your estimate for March to August, or use the basic amount, which is at the bottom. SARS will calculate the tax. You fill in the medical aid tax credit, and then if you paid pay as you earn, you have to complete that. In this, it's not often that people have medical aid tax credits. Not medical aid tax credits, the foreign tax credits. So that is why I'm not completing that. And then you file the return. The payment details is here at the bottom. Okay. I'm going to stop share now. And I'm going to do some, let's finish off with some Q&A. I'm just going to let me get to the chat. Okay, let's go through the questions. Jump to the first unread message. All right. Solar PV rebates. I would say if it's a rebate, the form currently, the RP6 form, don't take into account rebates. I would potentially include the rebate as part of the estimate, Carmen. But definitely watch it. It would probably make more sense to consider the solar rebates in the February provisional, especially after the law has been promulgated, because the tax laws are going to come into play with the solar changes. All right. Caesar asks, what happens if you don't have any dependents? Well, in order to have medical aid, you will have one dependent. If you belong to a medical aid, that's already one person. So not having any dependents doesn't make any sense. Let me just see. Where do you cover RA and Section 12A, Section 18A donations? If you do RA and Section 18A donations, you must include that as a deduction in your estimate. I think my workplace slip applies the medical aid tax credit. In that case, wouldn't it I wouldn't add it into the deduction. If you use your workplace workplace pay slip, I would still throw in the pay as you earn and the medical aid tax credit, because that would be the most accurate RP6 submission. We are not looking for perfection with the August provisional, also not for Feb. Feb, you are allowed to be 80 to 90% accuracy in terms of your estimate. So the medical aid tax credit wouldn't throw that calculation out too much. Sorry about the text being too small. I apologize. This is the first time. I should actually make the text even bigger or split out over more slides. But I apologize for for it that it's a bit too small. We'll definitely watch on. Okay, 3 questions. New topics, not sure what Keen Mind is on those things. I run my life finances through Notion. Is that an acceptable format for SARS if you're audited? Audits are unlikely for provisional tax. That's very important. Audits are almost it's highly unlikely that you'll be audited for a provisional tax estimate. I'm self-employed. I understand that receiving money in my bank account is a taxable event. But if I move 40% tax to another bank account, is that a taxable event? No. You can make transfers to your own bank accounts. Transfers don't trigger taxable events. What does trigger taxable event is if the money is from somebody else. So if you transfer money to yourself, that's a transfer. Is it possible to pay next February for the whole year? It is completely possible to pay in Feb for the whole year. I don't recommend it, simply because most people don't have very good financial management. So the amount that people can pay in August will help quite a bit with the February payment. If you have very good financial management, then you can always do a lump sum in Feb as long as the estimate is accurate. Clement asks, my employer does taxes on my behalf, but you're also an independent contractor. How does SARS reconcile the RP6? If I analyze my taxable income and then I don't get more income until Feb, what will happen then? I think, Clement, it's more important in August. I would say you can, if your employer pays most of your taxes, what I would do is I would actually increase the pay as you earn in order to make the payment null, and then you'll be sorted for February to then make a more accurate submission, taking into account all the pay as you earn that you've paid, and then making an increased payment if you need to. Okay, since we only have a minute left, I'm going to just share my screen again, just so that people can. Cool. Okay. So everyone can see there's a minute left. There's my cell phone number and email address. I can zoom. I should zoom in a bit. Sorry about that. It's Andre, so I'm going to drop it into the chat. Let's put it here. It's Andre at gafu.com. And I will make this available on YouTube. I hope this how do I meeting group chat? There we go. Yeah, and that's it, everyone. That's how you do provisional tax. I hope this was useful. I will post this onto YouTube if you couldn't make it. Okay. Thanks, everyone. Thanks so much for being here.